Welcome to Texas Capitol Live. I am your co-host, Steve Kennard. I'm the president of the AI Innovation Association. I'm joined by my friend and co-host, Lee Bratcher, president of the Texas Blockchain Council. And it's November 7th, another down day in the market today, Lee, in the headlines. The S&P 500 down over 1%, the NASDAQ down almost 2%, pretty much red across the board. This morning, Bitcoin had dipped below 100,000, now slightly back over, starting to kind of even out around that 100,000 number. Similarly in gold, right around that 4,000 threshold. So I think the market is looking for direction right now, seeing if we're going to continue this pullback. But more importantly for today, what we want to get to is talk about something that is front of center for a lot of corporate managers around the country, which is the impact of proxy advisors. We saw a whole controversial fallout with Elon Musk at Tesla on this very issue, and Texas is really providing leadership around this and what a path forward looks like around addressing this issue of these entities that own no interest in the actual company having a huge influence on the management of those companies. Here in Texas, a law passed, SB 2337, passed into law, and now these entities, ISS and Glass Lewis, have actually sued our Texas Attorney General, Ken Paxton, to prevent the implementation of that law around forcing more transparency in these proxy advisors. We have a tremendous guest today to help walk through this and really get into the weeds of why this is important, what Texas is doing about it, what this lawsuit means for corporate managers and corporations around the country. I'm excited to get into it.
Yes, as am I. We've got Chris Babick and Chris Converse from Foley and Lardner. They've really been leading the charge and have provided just a lot of insights to the various legislators who authored some of the bills in the bill package for the Texas Stock Exchange and to create capital markets here in Texas. And they are joining us now. Chris, so tell us a little bit more about why you got so excited about Texas capital markets and why you're working so hard to ensure that these proxy advisors don't have an outsized role in corporate decision making.
Absolutely. So we think that it's critical that corporate decision making be made by shareholders and their duly elected boards. And when we look at the role that proxy advisors play, it's not really sort of this neutral analysis and advice, which I think we appreciate can be very useful as someone looks into, the complicated nuance of corporate governance. But we do think that what you find is these advisors tend to have pre-made agendas, pre-made views, and they don't accurately represent the same decision making of people who have real skin in the game. And the problem with these proxy advisory firms is that once they provide their advice, they provide advice to asset managers, many of whom have formalized policies, and voting contrary to their pre-existing policy creates significant institutional hurdles, right? An asset manager is managing someone else's money. They've described how this goes through, and they've given a guideline for how they're going to vote. And if their guideline is, I'm going to rely on these neutral advisors, and the advisors give them bad advice, it takes significant work and effort to change that. That can lead to votes going against the shareholders.
And Chris, your firm, Foley, has been really involved in, I think, a critical lawsuit around this that actually involves the Attorney General of Texas. And it's pretty remarkable that these companies, Glass Lewis and ISS, have been willing to take this to court. Can you talk to us a little bit around your work with the Alliance for Corporate Excellence and your commentary to the lawsuit in the amicus curiae? And I apologize if I've mispronounced that. I'm not a lawyer. You'll have to advise me on that first and foremost. But I think it's really an interesting document y'all put together that digs more into the details and makes the case for why we need to have more transparency and regulatory oversight of this duopoly that's controlling corporate America.
That's absolutely right. So you said it completely right. Latin is for everyone, lawyers and non-lawyers alike.
Crushed it. Okay.
But so we participated in this lawsuit through an amicus, primarily because we wanted to help the court understand the role that proxy advisors have in the corporate governance architecture, and why what seems like a niche area is actually a very significant role. So ISS and Glass Lewis, they control up to 97% of the market for third-party proxy advisory services. They tend to have their own existing guidelines, and while we don't know exactly how many, they keep their customer lists relatively quiet, we can observe from the data a widespread practice of what's called robo-voting. That is, institutional asset managers who take an ISS or Glass Lewis recommendation and immediately implement that without an independent analysis of what ISS and Glass Lewis are doing. And to some extent, that makes a lot of sense for some institutions, right? Some institutions have broad-based portfolios. Proxy voting tends to be concentrated, mostly in about a 2-month period, with most proxies coming out in March and April, most annual meetings in May and June. And so asset managers need information they can rely on in making decisions that are going to be useful and helpful in managing their portfolio. And as they look for this advice, ISIS and Glass Lewis purport to be the gold standard. But when you dig into their recommendations, you begin to see a systemic of valuing non-financial interests over financial performance, or it certainly appears to be. And so understanding that these two advisors are influential over all of corporate America, and their guidance is often followed somewhat by established policy, when their guidance no longer seeks primarily the shareholder or solely the shareholder financial interest, you can see a distorting effect where capital isn't really voting for what everyone's looking for in investment, right? Increased returns, more growth, but is voting based on what ISS and Glass Lewis thinks to be the best statement of the world. And of course, they're fine to advocate for whatever state of the world they want, but when you're advising people on your investments, they really should be advising people in a way that's designed to maximize growth.
Yeah, it's like the old adage, no one ever got fired for going with IBM. No advisor got fired for voting ISS and Glass Lewis's recommendations, right? So there's a little bit of a kind of a negative externality there.
Yep. Yeah, you control 97% of the market. Where else are they going to go? I think that's part of what makes the case that there is a role for the government here to say, hey, we have a situation where there's undue influence from purportedly private interests. You note in your brief, Chris, that both of these entities, ISS and Glass Lewis, are actually owned by foreign entities, one by a German financial services company, the other by a Canadian private equity company. In general, that's not so much of a problem. We want to have cross-border relations. But when you have two entities that are basically controlling our financial markets, it should give us all some pause if that's controlled by foreign interests that are advancing an agenda that is at odds with the majority of Texans in their elected representatives. And so, Chris, we see this lawsuit, we see these companies actually willing to take our government here in Texas to court. What do you think about this lawsuit? Where does it stand right now? Is it going to be appealed? What does that roadmap look like? And is Texas going to prevail?
So I think this lawsuit is absolutely going to be appealed. I'll take these in sort of, I'll take those in a scattershot order. But I think this is a significant question of corporate governance going forward. In the lawsuit, ISS and Glass Lewis have already received a preliminary injunction preventing the Attorney General of Texas from enforcing the law against them pending the resolution of the trial. And that decision is currently being appealed, that preliminary injunction. Currently, trial is scheduled for February. So far, most of the motions in this case have been discussions and the typical challenges over managing discovery throughout it. So I am hopeful for Texas in this case. I think I understand why there is some concern, of course, about overregulation, about the role of government and speech. But at the end of the day, when you've got such a concentrated market position, and when you have been structured historically in such a way that you evade all regulation, and it becomes clear that you may be providing advice that some of your clients are sophisticated investors. Some of your clients have their own internal teams. Some of your clients are going to be able to say, we like this data you provided. We're now going to vote based on our own views of what's best for our shareholders. That's, of course, a perfectly reasonable market function. But when you start to see the numbers again, the numbers of companies that immediately sort of fall lockstep into the ISS position, when you see some of the hidden policy and other non-financial considerations that get brought into it. And when you see, for example, candidly, voting recommendations that just don't take into account practicality. One of my favorite stories, and I forget the company involved at this time, but ISS and Glass Lewis recommended a vote against the only woman director on the board because she was head of the Nominating and Governance Committee. And the Nominating and Governance Committee, in ISS and Glass Lewis's view, didn't elect enough women to the board, didn't propose enough women to be elected to the board.
The height of absurdity.
So recommended voting against the only female director there. You see things like this, and you really wonder: is this really advice that's in the shareholder financial interest? That should be what governs prudential asset management.
Yeah. Yeah, and Chris, I think another layer to this, and I'd like to get into this a little bit with your opinion, is the conflict of interest. So both of these firms kind of create a spider web of different non-financial things that they're contemplating in terms of making recommendations for voting shares. And a lot of that goes into ESG, a lot of it goes into diversity requirements, whatever that is. The nature of the law that we're talking about is not to say that those things should or should not be allowed, but rather that there should be more transparency around the contemplation and inclusion of non-financial factors in that decision making. Where this gets really out of control, in my opinion, though, is that these same firms then turn around and solicit these companies to provide them with consulting services to then understand how they rate and rank them and make recommendations. So basically, it's like, we're going to recommend against you to be on this board of XYZ company. But if you'd like to understand better why we're recommending against you, you can just pay me. And then they throw up this kind of absurd, well, there's a firewall between these two entities, our consulting side and our proxy advisory side. And it just doesn't pass the smell test. I think you pointed this out really well in your brief, which we are going to share with our viewers, because it's important to dig into that document. It's about 20 pages. I had no idea that this was the case. It just flies in the face of common sense. And I'm wondering how much you're seeing in the market, more and more people maybe refusing to engage in those consulting services or saying, hey, this is on the brink of just outright corruption. It's something we need to talk about more at a minimum.
So I think that's something that we will see as the lawsuit progresses and discovery comes out as to what is actually available to come. And again, to be clear, what we've seen are patterns of companies that when they engage the services suddenly get better scores, and when they cease to engage the consultant services see lower scores. I think, again, because part of what these entities have done has been in a fairly unregulated space.
Right.
There's been a lot of concern that this is the case. It's part of the reason we think this lawsuit is important, and we think we think that it is important for the state to be able to show and define what really is happening. Let's see these actual firewalls that are supposed to be in place and make sure. And I think it's worth noting. That this additional pressure on ISS and Glass Lewis is having an effect on them even now, even during the pendency of this litigation. In the last month or so, both ISS and Glass Lewis have adopted changes to their policies. Glass Lewis even saying it's going to stop providing, one size fits all recommendations and give a bit more detail. And so we think that this pressure, these points that two unaccountable advisors who are operating in a very, limited, in a very difficult to monitor space, in a highly complicated and technical area, but who end up wielding significant influence uh, across the American economy. Um, we think shedding a light on that and starting this discussion is important for how companies are governed and how companies are managed on the public markets.
Oh, we agree 100%. So you've given us a little bit of insight as to where you see the case going. The TRO will be appealed, and likely February is the trial date. What happens
Well,
between?
February is scheduled. I don't want to say, but February is the current schedule.
Understood. Okay. What happens in between now and then in sort of the Texas Stock Exchange world, as this is a pretty important reform for Dallas capital markets, NYSE Texas, NASDAQ, and Texas Stock Exchange? Are things sort of in limbo? I guess the decision would probably be made before, Q2 when ETFs and IPOs are happening on the Texas Stock Exchange. Is that your view?
So yeah, so on the proxy advisory front for Texas companies, um, this law is enjoined only against the attorney general. So the law is on the books, and a private litigant, such as a company who's been the subject of one of these reports or a shareholder of that company, retains a private right of action during the pendency of the trial. Whether companies are going to want to do that or not, I think, is an open question. Um, to some extent, that's got to be something carefully thought through, and so we don't expect to see too much. Although we could, I think a lot of it depends on, one, does the case keep to its schedule? Do we have a trial in February? Do we have a decision really before proxy season heats up, right? Um, you see a lot of proxies going out March and April timeframe for historical and regulatory reasons, and you see voting recommendations come out closer to the annual meetings. So we're talking really a May-June timeframe. I think the status of the law then in this upcoming proxy season is really going to be what's most effective. And so if there's a final decision by that time, I think that will govern. If something delays, I think it's a very interesting question if the status quo continues, where the AG can't enforce, but a company or a shareholder can. I think there's a really interesting question as to, should a company both, can't, what are the likes and the merits, and also just from the tactical and investor relations perspective, is it prudential to bring such a suit? I think that'll be an interesting question going into this proxy season.
So I didn't know that private companies still have that option. Obviously, Tesla just had a very public falling out with both ISS and Glass Lewis. Elon Musk has been very vocal about this, and that's one company who would be an obvious candidate if that kind of tension continues. Chris, I've seen publicly the Texas Stock Exchange, I believe, also filed an amicus curiae brief in support of this or against this suit, I should say, and in support of the implementation of the law. Is that the case? And have you seen the New York exchanges opine on this? Or, what other companies are kind of publicly out there talking about this, in addition to the brief that you have filed?
Yeah, so I think the Texas Stock Exchange has taken somewhat of a leadership role, and being very outspoken in favor of this regulation. We haven't seen the other exchanges participating. The Texas Association of Business is an intervener in this lawsuit. They have, and they represent a wide swath of the business community, in support of the state's position that there needs to be some regulation on these entities.
Well, can we put you on the hot seat for one last question, Chris? We saw Tesla and their shareholder meeting yesterday vote for the pay package for Elon Musk with a few caveats. How did that strike you? Were you expecting that? What were your thoughts on that shareholder meeting?
I don't think I had any expectation going in. I think it was good to see. I tend to lean on the side of, incentive compensation is the right strategy, and developing compensation plans that align executive performance and shareholder return, I tend to generally be in favor of. So I'm very personally happy that the exchange passed. I will that the award passed. I will say, coming out of that meeting with preliminary results announced, I think are exciting to me for Texas. There were a few shareholder proposals raised about Tesla that implicate some of the other non-proxy advisory Texas legislation that was passed this session. Tesla had taken advantage of the ability to create an ownership threshold for derivative claims, essentially ensuring that derivative complaints or derivative claims are brought by shareholders with a real economic stake and not really driven by contingency plaintiffs' counsel. And the New York City Comptroller presented a proposal for shareholders to consider and to remove that threshold. The meeting preliminary results announced that proposal did not succeed, which I think shows that shareholders are aware that some of these again, these contingency-driven cases really aren't in the long-term economic interest. And likewise, there was a proposal to preclude Tesla from taking advantage of the provisions of Senate Bill 1057, which very quickly allows a company to establish a higher ownership threshold for shareholder proposals relevant to the Federal Securities Act or the Exchange Act. And this proposal also failed. And so I think what we saw out of this meeting with the preliminary results announced is shareholder support for their own ability to keep companies accountable for aligning executives with company and shareholder performance, and with limiting the ability of sort of these third-party interlopers who have historically tried to, use the mechanisms of corporate democracy as a sounding board for their own agendas. I think all of which is very favorable and builds on some of the strengths that Texas has been putting into place.
Interesting to note that the comptroller from New York City was getting involved in shareholder proposals. I think the theme of this week is New York City loses, Dallas wins. Chris Babbitt, partner from Foley and Lardner, thank you for your time and your valuable insights, sir. Very much appreciated.
Thanks so much.
And now, speaking of New York, we are moving to a conversation around a mayoral election. Steve?
Yeah, so, this week, no big shocker at this point, Lee. I mean, we had seen all of the odds out there, 90%. New York has gone fully communist at this point. The first thing I'd have to highlight about this is that Mamdani won by over 50%. A lot of people were saying, the Republican in the race needed to drop out so that Cuomo could win. That wasn't the case. There was record turnout in this election, and at the end of the day, there was really no way anybody was going to beat Mamdani. So the sort of overly credentialed Ivy League class of Manhattan are going to get their way now and become now the capital of communism. Thankfully, we live here in Dallas. Our mayor has declared our fair city a sanctuary city from socialism. I'm glad to be a Texan, glad to live in Dallas. And I'll say as well, worth noting, on the transition team for the upcoming Mayor Mamdani is Lena Khan, who was the former FTC chair for President Biden and basically shut down M&A for 4 years in this country, kind of famously didn't allow iRobot to be acquired by Amazon for reasons that escape any kind of logical explanation. That company ultimately ended up almost going bankrupt and has lost a lot of market share to Chinese competitors. That's just one example. So these are the kind of people that are being presented to run, the city of New York. I'm disappointed as an American, but I want to encourage my fellow Texans. Now this is our time. We've talked enough about what's going to happen in New York. We're done talking about New York. It's time for us to lead and say Dallas is the future. If you want to invest, if you want to build, if you want to have a flourishing economy, this is the place to do it. We have not only the political leadership to do that, but we have the talent here and we have the culture as well to back that up. I'm feeling more bullish than ever. We had an election here recently ourselves, a little bit overshadowed by all of this going on in New York City, but we do want to highlight one of the important parts. I think there were 17 propositions.
That's right.
They only get on the ballot in Texas with, I believe it's a 2/3 threshold in both the House and Senate in Texas, meaning they were all with bipartisan support. I think that's important to note. We had 17, all 17 passed. The one we want to highlight here is Proposition 6, which focused on taxes on security transactions. This is really an insane policy that some people in New York and New Jersey have been throwing out there. We're just going to put a tax on every transaction on an exchange, which is basically telling companies, we don't want you here. Leave. We don't want companies raising capital in our jurisdiction. State of Texas taking a totally different turn on that, and the people of Texas voting to support banning taxes on security transactions.
That's right. And we saw, New Jersey playing around with the concept of a transaction tax, and even New York as well, as you mentioned. I think the key for the audience to understand here is a lot of the data centers that are operating high-frequency trading and all the trading that takes place in New York City are located in New Jersey, just across the river. And New Jersey was probably thinking, hey, we need to get a piece of the pie from a tax revenue perspective. Problem is, once you start taking bigger and bigger pieces of that pie, you have the businesses looking elsewhere.
Right.
And I do think that both of those states entertaining a transaction tax helped us out here in Dallas with encouraging investment in the Texas Stock Exchange, encouraging NYSE Texas to stand up and NASDAQ to create their second headquarters here. So it's a positive thing for Dallas. I think it was, Bryce, you may look up the percentage of Texans that voted for this resolution. Last time I checked, it was in the mid-60s. That was as the polls were closing. So it may have changed a little bit. So it wasn't like it passed just barely. It was a pretty resounding, politics, anything above 60% is a mandate.
Yeah, and I think it is important to highlight that this doesn't have to be a Republican-Democrat thing. I think it's a common sense versus just failed government intrusion thing. And you've had bipartisan support here for Texas being the jurisdiction of choice, as the CEO of the Texas Stock Exchange said. So we encourage that. We applaud it. We want Texas to be united behind this initiative to lead the future in America. And we've seen that here. And hopefully we can avoid kind of this overly partisan infighting and really focus our attention on what do we need to do from a common sense perspective to make sure this is the best place to invest in and grow a business, and that is public safety, and it's also passing these amendments that give that clarity that we are never going to contemplate incremental taxes on businesses here. We are a low tax, low touch regulation state, and we don't just say it, we back it up with actual action, and that's what this election this week was all about.
Yeah, it was 79% of Texans.
Yeah.
Oh, wow, it increased a lot in later voting. Wow.
So great to hear that. Now, let's talk a little bit about one of the most high-profile and kind of impactful companies here in Texas, and that's Tesla. We had a big event yesterday in the shareholder meeting, but as a kind of introduction to that, it is really pretty remarkable to have such an amount of discussion leading up to a shareholder meeting around a particular vote. Most of the time, these shareholder meetings come and go. Fairly not controversial. This one was anything but that. Most of that was focused on the compensation package for Elon Musk. I want to read a little bit about what that contemplated and what amounted to kind of this headline of Elon Musk is going to get $1 trillion. I think the misleading thing here that people get carried away with is, oh, he's just going to, like someone's going to cut him a check for $1 trillion. Yeah. Couldn't be further from the truth.
Yeah.
Okay, so what must Elon Musk deliver over 10 years in this contemplated compensation package? He has to grow Tesla to about an $8.5 trillion market cap. That's over 450% up from where it was going into this shareholder meeting. Incredible shareholder value being built there. 20 million vehicles delivered. So there's a concrete, just putting aside even kind of stock price fluctuation, concrete deliverables of real business, key performance indicators. 20 million vehicles, insane number. 1 million Optimus humanoid robots sold. There's all these companies out there talking about, we're going to have a humanoid robot. No one's really put one into the market. Not only are they saying we're going to put some in the market, we're going to go to 1 million, an unbelievable threshold. 1 million robo-taxis in operation. 10 million full self-driving subscriptions. I think you could take any one of those things. Mm-hmm. And if you achieved that, you would be a generational CEO in America. If you achieve all of those things, you're one of one. You're one of one, and that's Elon Musk. And that's what this vote was all about, is who else, if you vote against this, who else are you going to get? What other person on planet Earth would look at this and say, yeah, I can do that? Give me a shot. It's absolutely incredible. And the fallout around this had a lot to do with the influence of Institutional Shareholder Services, ISS, and Glass Lewis, these two proxy advisor firms that were pushing against this compensation package. Of course, they do that without giving any kind of plan B. They just say, well, we're against it. Well, who's going to step up and actually deliver for this company? That didn't seem to matter. But I wanted to highlight that, and I want to play a video just from very recently of Elon Musk on the All In podcast, and they start to talk a little bit about sort of the politics, if you will, of the board and the influence of these proxy advisors. Can we play this video? I think it's important commentary.
Last week, and we talked about how crazy ISS and Glass Lewis is, and
Right.
we used this one insane example where like Ira Ehrenpreis didn't get the recommendation from ISS and Glass Lewis because he didn't meet the gender requirements, but then Kathleen also didn't.
It doesn't make any sense.
Can you? So the board vote is on the 6th. So
who's an African American woman?
Makes no sense.
Yeah, they recommended against her, but then also recommended against our enterprise on the grounds he was insufficiently diverse. So I'm like, these things don't make any sense.
Yeah.
So I do think we've got a fundamental issue with corporate governance in publicly traded companies, where you've got about half of the stock market is controlled by passive index funds, and most of them outsource their decision to advisory firms, and particularly Glass Lewis and ISS. I call them corporate ISIS.
Love this name.
So all they do is basically they're just terrorists. So they own no stock in any of these companies.
Right.
So I think that there's a fundamental breakdown of fiduciary responsibility here, where really, any company that's managing, even though they're passively managing, index funds or whatever, that they do at the end of the day have a fiduciary duty to.
So that's the critical ending statement here. They have a fiduciary duty, but legally they really don't, which is evidenced by their ridiculous recommendations and total lack of transparency around how they even arrive at the different factors that go into this. I think it's remarkable to see a CEO that's leading one of the most transformational companies having to talk about proxy advisors. And I'd have to agree, corporate ISIS, we should have a rebrand there. Yeah. Corporate ISIS, they're just terrorists. You can put that on the business card every time you hand it to somebody. It's really amazing that in light of so much attention on this vote, there was no relent on their part. There was really no engagement on the issue. And now I want to play a video from the actual shareholder meeting and see the outcome after all this back and forth of how this played out. So this is from the shareholder meeting at Tesla headquarters yesterday.
Approved. Fourth, on the election of our 3 Class 3 directors, Ira, Joe, and Kathleen, our shareholders have reelected them.
So these were the directors they were recommending against because they weren't diverse enough or whatever, even though one of them was a woman and it made no sense.
Yeah.
That passes.
Fifth, on the amended and restated 2019 Equity Incentive Plan, our shareholders have approved. Sixth and finally, on the 2025 CEO Performance Award to our founder and CEO, Elon Musk, with over 75% voting in favor, approved.
75%.
Makes total sense. If you're a shareholder and you have to, you basically get to pay your CEO very little for the next 10 years unless he achieves these crazy targets.
The cheers are totally deserved.
You're
got the Elon
saving,
chant going.
You're saving a lot of money as a company. Saving billions of dollars.
So it's like a party scene here at the shareholder meeting. I love this, by the way. More shareholder meetings should be like this. Look at the
And those
robot
bots
dance.
are just dancing. There are no wires. Those are actual robots.
We'll hear a little bit here from Elon, some of the highlights.
Yeah.
We got to get a dancing robot in here, though.
The sheer scale of Optimus, I mean, I'm going to say a bunch of things that probably I shouldn't say, you know, but...
That's why you got to love the guy. He's going out on a limb.
But that's what keeps it interesting. I think it's going to be the biggest product of all time by far. Yeah. So, like bigger than cell phones, bigger than anything. Like everyone's going to want one. I think in terms of industry providing products and services, I think it's probably, I don't know, 3 to 5 robots in industry for every, one that's a personal robot. I think there could be tens of billions of Optimus robots out there.
He's bullish.
Starting with building a 1 million unit production line in Fremont. That's line one. And then a 10 million unit per year production line here on the...
So we could see these being built here in Texas.
People often talk about like eliminating poverty, giving everyone amazing medical care. Well, there's actually only one way to do that, and that's with the Optimus robot. Precise. Optimus will ultimately be better than the best human surgeon. People have always talked about eliminating poverty, but actually Optimus will actually eliminate poverty.
Yeah, I think the ratio there of 3 to 5 industry robots to 1 personal robot was an interesting,
very interesting
comparison. And
that's how you get to tens of billions.
That's how you get to tens of billions. And I think that's why we need so much more entrepreneurship training, so much more creative thinking, critical thinking training. I mean, the rote skills and just repetitive tasks will all either be automated through AI or taken over by robots.
Is there anything more ambitious as a tagline than this will actually eliminate poverty?
Right.
I mean, just an incredible outlook from Elon, 75% in favor. The terrorists at corporate ISIS have been defeated, as they should have been. And how can you not cheer for Elon? I think this is just amazing. I'm looking forward to hearing more around the rollout of that manufacturing, how much we can bring to Texas. He mentioned they're going to start at the legacy plant in California. That's just awesome. Amazing to watch this in real time, and just congratulations to Elon and the Tesla team on their whole campaign around this issue to earn that 75%. So that's the end of this episode of Texas Capitol Live. We end the week, I think, on a high note. We can all be excited for the future here in Texas. So much more.